and some great things that occurred near the end of the month that I believe is going to have continuation for quite some time. So I'm going to start off with US dollar yen. You guys probably thought I was stubborn. You know, I had shorted it a few times and had partial profits and then had to come out of it. But I'll tell you what, last week I was talking about the breakdown of this triangle and it manifested. And even the next day, the wick tested this breakdown of this descending triangle. And we've had windfalls down here. So, you know, you should have been taking some partials depending upon where you got in. Even if you got in at the breakdown, you're looking at 350 pips. If you were selling rallies with me, that much more. I just want to stress that although there'll be rallies along the way, that the only thing that's going to change the technical outcome of this would be closes back over 153, 154. We could have a correction, say, for example, if the BOJ does not raise rates at their next meeting, that could be set up a rally in US dollar yen, but you want to sell rips. And here's the reason why. Let's look at the big picture here on yen. It's what I said I would talk about today and start with the weekly. So when we're down here, I said I was looking for a rally for some type of right shoulder of a head and shoulders top. Now, for it to have symmetry, it would have stopped at 52. Instead, we went to 56.70. So maybe it is an irregular right shoulder, but there is no doubt that for right now, it's a failing rally. I think we got to 78.6. You're wrong over last week's highs. And although there might be bounces along the way, especially if yields pop, it's my belief and my conviction that eventually we're going to test this major support level once again at 140, and it may be defended for a while, but a breakdown under 140, just simple math, is going to take you beneath 120. So this is a rainmaker. Okay, you can make it rain in your account. I mean, this break last week makes up for a lot of little paper cuts and mistakes in the market, and we're going to stay short yen, not trade at counter trend. Everyone raise their right hand. We're not going to trade the yen counter trend. We'll let it rally and then lean into rallies to take advantage of what could be a major decline. That's happening not only in the yen, but in yen crosses. So I guess you have my gist. I was bearish before when it was a theory. I have even more conviction now because the theory has manifested with the breakdown that we had last week. So sell rips. You know, maybe we're only going to get up to 52. I mean, the dollar is very strong today, and you would think the yen, after that slide, be up 70, 80 pips today. May still end up doing that, but now let's get to the dollar. And it also hit a technical area that I was talking about for a week or a little bit longer. So here we are. I talked about this line at 105.70 that the dollar had to take out 105.70, which if you look at it on a longer term time frame was a pretty big breakout. So for it to be tested is not unusual. There's a better look at it. Back under last night's low, you have a top in the dollar. But to me, this looks like there's one more advance to take it over these highs that we could. 109 was my number, and here we are. The high was 108.07, so we're going to take out this high by 100 points or so. That's what I'm looking for before I'm going to start looking for a top, which if that plays out is going to mean a lower euro to take out 103. Maybe we go to 102 and a half on the next break. It also means a lower pound, which could take us down towards maybe the 122 level. So there's still plenty left in currencies on the other side of the ocean. And then here's Aussie. I'm thinking down here between 3.5 and 2.5 may be worth a probe. So that's your currency look. Also, Canada, I believe, has another push to the upside. Let's see what the RSI did at that last high was kind of a poke. So waiting for it to come up. Slow today. Anyway, there it is. Okay, so we did diverge, but I still think if the dollar's going to 109, we'll have a third drive in Canada. US dollar MEX still in trouble, still heading lower. Here's a gold. It's been all over the place. Oh, one other thing I want to talk about Euro pound because we're on the verge of a pretty important breakdown under this level. We'll see what happens. It's going to really set the tone for the next wave in the dollar rally. If this starts acting good, even though the dollar rallies another um, 200 handles or so, two and a half, I don't think it will. But this would be your first sign. I'm going to watch this because I do believe when the currencies turn that the euro will outperform the pound, but we're not there yet. Gold, it's a toss up to me. It's not a bad looking day. Perhaps we're going to have some type of geo problem. Silver, I still could have a chance to make that move up to 32 and a half. I'm neutral. I'm not buying it here. I would buy it much lower and I'd sell it on a rally up here. So it's kind of like a no man's land for me. I have more conviction. And let me make a point again. Stick with the girl that brought you to the dance. And for me right now, it's a US dollar yen. So I'm in tune with that. Do I really have to be right in 8 other markets to be successful? I've often given the example of floor traders that never left the same trading pit and traded cattle for 30 years and didn't have to diversify into grains and currencies and metals and oil. So just want to make that point. So it's okay for on some markets to have an I don't know and wait for your major inflection points. I guess that's the point. The other breakout that's being tested is the gold silver ratio. Okay, we broke out, we tested it, we're trying to pull back here. This correlates pretty tightly with the dollar. So if I'm looking for new highs in the dollar, I would think that the gold silver ratio is going to make another move. I've been talking about 92. Um, Looking at yields, they came off a bit last week. They're trying to bounce again. Maybe this was just the first wave down and they're going to pop again. The big number for rates this week is the NFP. The TLT rallied very smartly on the cabinet pick for Treasury. I don't know if that's enough. I think the inflation numbers are going to be more important than who our Treasury Secretary is. And finally, let's get to some of the energy. You guys know I'm still looking for the low 60s in WTI, and there's nothing that's going to change that changes my mind here. First sign would be it getting back above $70. That the scenario for 62, and you guys know why I'm looking for 62. This is a wedge line, return line I've had drawn for quite some time that comes in down here. Nat Gas has pulled back quite a bit, and I think we're into some gapping areas. I consider Nat Gas to be a buy. Looks like we had just a little ABC and a pretty shallow pullback. So Nat Gas, even though I'm looking for lower WTI prices, to me this is a bull market, and we have an ABC, and it looks like we're headed higher. Also, that specs have record shorts and commercials are very long. Something else to keep an eye on. So we're making new highs in the S&Ps, but as you can tell on the S&Ps, which are much weaker than NASDAQ today, which is different. Look at this. So back here, we didn't have 4-hour divergence, right? See that? I mean, it diverged, but what was it over? It was over 70. On this rally, we made two successive new highs here and here, and we're not confirming. So I'm just saying, look at the divergence across all time frames. The worst is the weekly for S&Ps, if it'll come up. There you go. So at new highs, we're trading 67. That's the weekly. So I think we're close. I guess the question is everyone's looking for 6,100 again. You know my theory. I talked about it. It's possible that it doesn't get there. And if it gets to 61, it's going to blow through it. So here's the daily. We're in this third drive area right here. We're not confirming. I already showed you the 4 hours not confirming. So I'd be pretty careful with my longs here. The yen declining and the yen crosses declining eventually will line up with risk off, will be the next domino to fall. So I believe that's all I'm going to cover. Let's take a look at a couple of my short ideas. Google's up. I continue to buy puts in Google, maybe up here at 76 or so. I don't think we're going to take out 85. And then NVIDIA, where we had a pretty negative week last week, I'd say up here around 142 or so is where I'd be considering puts in NVIDIA. Think that we could go to 110. And I think that's all I'm going to cover today. Main point being, you're not late if you didn't sell the yen last week. This move is just beginning. Be patient for a dollar top. We're not there yet. We will be there, but we're not there yet. And be careful with risk. And I'll see you in the room. I post there. Mike should be up here in a little while, probably an hour and 15 minutes. And I'll be back with Mike on Tuesday. I have Crypto Geek news. Crypto Geek's going to be with us Wednesday. Let's take a quick look at Bitcoin. It did come off a bit last week, and it's off a little bit today. So, again, there's no divergence here. We just had this little pullback, but I believe this high was confirmed. See if it comes up. We could just have consolidation. Yeah, you see, over 80. We could still have consolidation too and a pullback before we go again. So everyone, I hope that you're understanding the reasons why I'm doing what I'm doing, also the psychology, because 90% of trading is in your head. And we have to change what our normal paradigms are. We weren't really hardwired to be traders. We have to retrain our psychology to do the opposite of what is human nature, to be a trader. And don't just count your pips, count your blessings. Let's all